Bank of Canada meets tomorrow. We are expecting a rate drop. As to how much of a rate drop that's going to be, that is to be determined. Likely quarter point. Some people are speculating half a point. That would be a little bit drastic, but not to say that it won't happen. A really big common misconception that I've been dealing a lot with over the last few months, as we've seen the overnight lending rate come down, is that, everybody's asking, is my rate going to drop? But in all actuality, the overnight lending rate is only affects variable interest rates. So fixed rates are based off of bond yields. So as we see bond yields increase or decrease, we're going to see fixed rates increase or decrease. But when that Bank of Canada rate announcement comes out, that directly affects variable rates. So for example, somebody that's got prime minus 1%, let's say, prime right now is 6.7. You take off 1, you get 5.7. If it drops half a point, that 6.7 goes to 6.2. You take your 1% discount off that, now you're at 5.2. So those are the people that are going to be really affected by that overnight lending rate announcement, not necessarily people who are in fixed rates. Now, as far as what rate you should take, it's the age-old conversation of everybody is different and every situation is different. If you are looking at doing a flip, well, we're probably going to look at a variable or a home equity line of credit, which also is variable. If we are looking at a long-term hold and we're going right to your max on qualifying so that we can get that property that's going to cash flow, we might need a fixed rate, because fixed rates are just so much lower than variable that they help us qualify for more purchase price. If you are somebody who's more risk tolerant, you might consider a variable. If you would like to know exactly what your payment's going to be every single month, you might want a fixed. So what term, what rate you should be taking, those are really personal conversations that I have with each of my clients. But as far as tomorrow goes, if there is a drop, it will affect anybody that is in a variable rate. And keeping in mind too, it doesn't just affect necessarily mortgages and lines of credit, home equity lines, but it can also affect your unsecured debt as well. So if you've got an unsecured line of credit with a balance on there, typically those are prime plus 2, prime plus 4. So if we see that Bank of Canada overnight lending rate drop, we're going to see the prime rate follow suit, which means your interest rates and costs on those unsecured debts will also hopefully decrease as well. So stay tuned. There will be an announcement tomorrow morning, and then it'll be all in the news, I'm sure, as to whether or not there was a drop. But to kind of touch on what Tim and Azad were saying too, is as these rates are dropping, it does instill consumer confidence. So those people that are sitting on the sidelines, as these rates come down, they are going to start to get back into that market again and writing offers. And so that's why we kind of say, as rates come down, sometimes we see prices start to increase because there becomes more demand again. It creates that demand for real estate because people can now afford a slightly higher purchase price, or their payments are going to be less, or their cash flow is going to be better. So then we start to see the effect of that, which is again getting into some multiple bids and things like that. And we might see prices adjust slightly upwards as a result of lower rates and more people getting into the market. So it's always funny. We say in real estate, now is always the right time to buy. Waiting and trying to time the market, is a bit tough because, prices go up, rates come down, prices go up there, rates go up, prices come down, but then you're paying a higher rate. So it's all tomato, I like to say it. As long as you're getting in, then you're getting that property appreciation and that debt pay down from your tenants. So never a bad time to buy.